Retail sales numbers have continued to trend lower. Not great, right? Not great for the economy. So retail sales continues to trend lower month after month. We are seeing good for interest rates, by the way, but not good for the market. Consumer sentiment, which is a very future-looking consumer sentiment index, down at 64.7. The number doesn't really matter. The point is it's down. It's been down. So that means like a 5-year forward looking, the consumer's not feeling super confident. So also not great for the market, potentially good for interest rates, not good for the stock market. Another little note here is that so current real estate inventories, we talked about this a couple episodes ago when Anton was on here and he was breaking down kind of inventory levels here locally in the Washington market, the Seattle market. But nationally, we have a 5-month supply of homes on the market. This is not historically a lot of inventory, a 5-month supply. But compared to where it was, like if you go back to like 2022, where we had less than a 2-month supply, and there was times where we had a couple weeks supply of homes on the market, this is a pretty healthy level of inventory. And I would say a high enough level that you could, in some markets, start seeing a softening of values. I just mentioned earlier, 4.5% to 5% year over year. Does that continue? I think it continues, maybe not at exactly that pace, and probably not in every part around the country. There's going to be hot spots and low spots, but a 5-month supply of inventory on the market. And we all know, we've heard the stories about, markets like Washington, D.C. and other markets where there's been a lot of government jobs that are either been, people have been terminated, or there's just a fear of job loss in certain markets. People are listing their homes. So those markets obviously will skew the numbers a little bit, and you're going to see some of that. But keep an eye on inventory. Now, here's the other thing that I kind of see. If you kind of zoom out a little bit, you go, okay, so we got a 5-month supply of homes. That means probably a little bit more negotiating power for buyers, a little more flexibility. Sellers willing to maybe give some concessions, maybe help deploy some of those strategies for buy downs or permanent interest rate buy downs, or just simply price reductions that are going to help things move along. And then you couple that with what we've seen, over the last couple of weeks in the bond market and interest rates getting a little bit better. And I don't know, things could, we could be off to a pretty good spring here when you put all these things together, as far as affordability getting a little bit better, the ability to get financing and use some seller support to help get a little bit lower interest rate, things of that nature. So I think there's some good nuggets here that we can take away, but I think long term, it's really hard to predict what the market is going to do.